Hey, what's going on, folks? My name is Amal. I'm the head analyst of the Cryptosomniac community. If you're watching this video right now, I'm going to do a quick tutorial on how to trade Elliott Waves. I've been trading in the equities and commodities markets for about 11 years now. I've experience in Forex as well, but not as much. I've been trading in the cryptocurrency markets for about 2.5 years now. And one thing I can tell you for certain is a lot of the trading principles that apply in the other tradable markets, the other financial markets like Forex and equities and commodities, they're all actually applicable to the cryptocurrency market. Okay? So today I want to talk about the Elliott Wave principle and how you can use it in the cryptocurrency markets. First, let's go over some brief history of the creator of Elliott Waves, someone named Ralph Nelson Elliott. He was actually an accountant, but he actually analyzed 75 years of stock and market data in a span of a few years, and he started to realize that prices actually move in patterns and cycles. Okay, so what this told traders back in the 1920s is that you could potentially predict where prices of a particular asset could be. Because back then, people actually thought that markets actually just move randomly, okay? That they just move, willy-nilly up and down, and no one really knows how to strategically trade the market. But what Ralph Nelson Elliott, after he researched all this data, realized is there's a lot of human psychology and mass psychology at play in how you visualize markets and how you trade them. And with Elliott Waves, we can ascertain how to use this principle better to trade the cryptocurrency markets. And so I'm going to go over that a little bit today and try to teach you how you can use Elliott Waves in different time frames, whether it's bullish or bearish cycles, in any different asset. You can see this not only in BTC, but Ethereum, Waves, Litecoin, anything. Or you can even go to gold or corn or Facebook stock, Apple stock, anything. You can apply this to anything that has human psychology at play. And Elliott Waves is not only just applicable to financial markets, it's actually applicable to larger trends at play too. But that's another topic. So first, let's sort of go through exactly this wave count right here. Typically, Elliott Waves comes in this 5-wave cycle. You have this first wave up, which is the starting of the first Elliott wave. The second wave is a pullback. The third wave is a big sharp move up. Fourth wave is a pullback, and then fifth wave tops off the trend typically. Okay. Now, each one of these waves is actually, this one right here is actually wave 1, 3, and 5 are actually known as motive waves, okay? M-O-T-I-V-E. And then number 2 and 4 are actually known as the corrective waves, okay? Now, wave 1 is typically hard to determine that this is the beginning of an impulse, okay? That this particular asset is either recovering from a bear market. It's really hard to tell, okay? And generally in this area, news is fairly negative. Consumer and investment sentiment hasn't, quite been as positive. And options trading is pretty much pulled by implied volatility being typically very high, okay? And wave 2, this is typically seen as a bearish move. People often think that, okay, I guess it looks like we're going back down again. It's a low, but it's usually a higher low as per this swing right here. Okay, so this starts wave 2, and typically wave 2 is right around, at the very highest, it could be 382 fib, or it could go in as deep as 61.8 fib of the entire wave 1, like this. Okay, and then the third wave is usually the most powerful wave. Okay, this is where news starts to turn very positive. Okay, the market and investment sentiment is starting to show more positive signs, and people are that were originally on the sidelines are actually starting to get in this particular move right here. Okay, now wave 3 is typically about a 1.618 extension between the waves 1 and 2. So if we sort of did it like this, right, if we said that this is wave 1, wave 2 pulls back right here, wave 3 could typically be right around that area right there. Okay, this is just a general example of how I've done it. You know, just a general wave count. So don't hold this fib, you know, to that. But I'm just saying that in general, you could see a 1.618 extension between waves 1 and 2. All right. Okay. Now wave 4 is usually the calming of the exuberance of wave 3. And people often think that this is, you know, the topping of the trend and looks like we're going to go down right now. But usually, again, over here, wave 4 sort of corrects 30 to 40% of this wave 3 right here. Okay, and then wave 5 is really the topping off of the trend. Okay, wave 5 is usually the sign of, you know, this is the last sort of push in the asset. Volume typically tends to come down in this final wave 5. And more often than not, the investment sentiment isn't really that high up here in wave 5 as it was in this phase right here in wave 3. Okay, typically in commodities, wave 5 is actually the highest and strongest wave. So because BTC operates as a commodity, a wave 5 we could expect to be, you know, much larger and much stronger. Okay. The volume profile behind that is still, you know, up for grabs, so I'm not going to debate over that. But for the most part, this is generally the count of how 1, 2, 3, 4, 5 waves start. Okay, again, this is the bullish scenario. Now what we'll do is after what happens, wave 5, is that there's a ABC corrective impulse. Okay, so here you have the A wave right here. Okay. So I'm going to sort of draw this out, make this smaller. That's the A wave right there. Okay, this is usually known as the corrective wave. The B wave looks like it wants to come back up, but doesn't really reach as high as wave 5. And so this is where traders, at least most traders, start to realize that, okay, this might actually be at the top of the trend. And usually when wave C comes down, traders might set their stops right around this area right here, where prices, if they break this A low, clearly it doesn't look like it's going to go much higher. This is really the top, this is the lower high, and wave C is about to pull back, you know, a lot deeper. Okay, and so this essentially makes up the entire 5-3 wave count, they call it. Okay, it's called the 5-3 count. All right. The 5-3 count is 5 waves right here, 3 waves down. And the interesting thing about this is you can actually apply this to any time frame. All right. So Ralph Nelson Elliott, he named things in different cycles. All right. So he calls it the grand super cycle, which is centuries. Okay. The super cycle is in decades. The cycle is known as years. The primary is months to years. The intermediate is weeks to months. The minor is weeks, essentially. Minute, or rather minute, is known as days. Minuet is hours. And sub-minuet is minutes. Okay, so what you can do with these is once you start going over here for your Elliott Wave tools right there, okay, in your Elliott Wave impulse right there, you can pull out your tools and start making these kinds of waves like this. And you'll see once you hit this gear right here, you can see intermediate, grand super cycle, primary, minuet, sub-minuet, and they go higher to super millennium and all that, but I don't think we'll need that. For the most part, we'll probably be focusing, at least in crypto, intermediate and all the way down. Okay, so you can utilize this wave count to do it in every different time frame, whether it's minutes, hours, days, weeks, or months. All right. Because crypto doesn't really even have that much data for, multi-decades or multi-centuries, right? I mean, most assets don't anyway. So you can use this as a general, rule of thumb of how you can map out Elliott wave counts, okay? So let's sort of practice a little bit and see how we can do that, all right? So if we start going off on this movement right here that we've seen lately in BTC, I had spoken about how Bitcoin is actually potentially, after it bottomed right here, this was wave 1, wave 2 was right here, this could potentially be wave 3, quick pull to wave 4, and then wave 5 could be right here, okay? Now, the sad part about Elliott waves is that it's really hard to determine which wave lands where. I mean, yes, for the most part, you can make a pretty good judgment about, how high the waves can go in terms of the particular asset. You could start looking at the volume profile over here, down here, and see, if the volume matches up to match what the Elliott wave actually talks about. But for the most part, it's a fairly subjective game. Okay, so wave 3 could actually be up here. Wave 4 could be over here. And we may have yet to finish wave 5, which could be way up here. Okay, because again, wave 3 typically has some of the highest volume. So I would actually say that all this volume is more applicable to wave 3 in this mess right here. Okay, so in this case, wave 4 is a bit of a pullback. What did it say? 30 to 40% of wave 3, right? Again, these are all general figures. If we start, going down like this, so from this top to this bottom, how much did we go down? Right around 20%, okay? It's not a necessity that you have to go down 30 to 40%, but as you can see, you can see the wave 4 pulling back a little bit deeper, 10 to 20%, and then that wave 5 potentially pushing higher, okay? I just want to do this, general mock-up of how these wave counts work, just because I wanted to explain to you that you can use this in any asset, really. You can go to Ethereum on, say, a 15-minute chart and start mapping out wave counts, all right? So I guess you could look at it like this. Okay, so here's Ethereum, right? Here's that bottom that was put in right here. Okay, so we're gonna draw our little Elliott wave count. Here's wave 1 potentially, 2, 3, 4. Actually, so here's the thing about 4, okay? None of these waves can go deeper than the preceding wave, okay? So for example, if wave 1 is over here, wave 2 cannot go deeper than the start of the wave, okay? If wave 3 is up here, wave 4 cannot go deeper than wave 1, okay? And wave 3 cannot be as high as wave 5, I'm sorry, okay? So this does not work out properly, okay? So what we may have to do is correct our wave count a little bit. So this might actually be 1, this might be 2, that might be 3, this might be 4, and then this might be 5. So now everything matches up, okay? So we're on the 15-minute chart, and as you can see, that 5 wave count works out, okay? So now we have to go to the ABC corrective count. So this might be A, the B might be finishing off, actually this could have very well been the B right here. So you could say A right here, B right there, and C has finished, okay? Then you're gonna have another mini 5 wave count in here, okay? Remember that Elliott waves don't necessarily just have to go up, they can actually pull back down as well, okay? They can go the bearish route as well, okay? So you could see how this applies on many different, time frames, many different ways, up or down. So another important thing to understand is that within Elliott waves, there could be more Elliott wave counts, okay? And these would be called fractals, sort of like this, okay? As you can see, in this larger wave count, right, you see many impulse waves within it, okay? So for example, this wave 1 has 1, 2, 3, 4, 5, right? And then within this wave 2, there's the A, B, C, okay? And within each of these, there's a smaller wave count underneath that, right? So this is where Elliott Wave gets a little bit more complicated, and you have to sort of dissect prices into even smaller and smaller time frames, or even smaller and smaller waves, to be able to understand exactly where prices may be going if you're trying to become a trader and just trading, you know, say the shorter term volatility of the chart. All right. Okay. So I hope this, brief sort of helps you understand how Elliott Waves work. I know it's a little bit fast, but if you want to read more, there's a ton of different YouTube channels that will give you in-depth explanations. I'll try to do a more deeper dive into Elliott Waves, but as far as, learning how to use the wave counts, I just showed you really the most basic way to use them. And that's really all you need, guys, to be able to utilize Elliott wave counts, okay? There's really not a whole lot to them. And for the most part, a lot of traders around the world use them, but then there's also a lot of other traders that might just say that they're absolute bullshit because they're so subjective. So it's really about how much of a success and accuracy can you get from the Elliott wave counts, and are you able to keep your emotional bias out of it and use it successfully? Okay, so just like any other indicator, any other pattern or technique that you use, it's really how well it works for you, how consistent and profitable it is. For me, Elliott Wave has been fairly accurate and fairly successful, so I like to use it from time to time, but I don't rely on it for every single trade. I don't rely on it as my go-to method of being able to trade. It's just one of the many techniques that I use to be able to map out exactly where I think prices are going, where the wave counts match up. All right. That's pretty much it, folks. I hope you enjoyed this quick brief on Elliott Waves, and I will see you guys for another lesson in the near future. Cheers.